today, India tapping into its potential. That's the topic for the evening. And this can be interpreted in two ways. One with an exclamation mark and another with a question mark. An exclamation mark saying that, yes, indeed, we are tapping into our potential, we are ready to grow, and, we are doing all things right. We are tapping into all opportunities in the right way and manner. And a question mark saying that are we really doing what is required to be done for us to go to the next level of growth? As CareEdge, we project in the Amrit Kal, in the 100th year of our independence, we will be a $25 to $30 trillion economy. And if that's the pace that we want to set for ourselves, are we really doing all things right? Or do we need to do something else, something more? And those are the topics on which I'm going to pick the brains of the panelists today. We start with the big agenda of the Government of India, which is digital transformation or technology, as we say. And I want to ask you, Nina, how, in your opinion, do you think that India is leveraging technology for the next level of growth that we're trying to achieve? And how do you see the technology stack of India?
Thank you. So I think this is a very pertinent question, and commentaries people have alluded to this dignitaries have alluded to this during the afternoon as well. Now, as far as the India stack goes, I just want to, all of you know what India stack is, so I don't need to get into the fundamental aspects of it. But I will nevertheless take a minute or so to set the context and share with you why I believe it is a very far-reaching propeller for the growth and the digital momentum of the Indian economy. So, essentially, we all know that the digital stack is, identity plus payment system. But I think the most remarkable thing that has happened recently, a year or two ago, is the third layer to that stack, which is the open credit enrollment system. This is absolutely far-reaching because it's a very unique confluence of regulation, very unique confluence of government, and, of course, the large community. What this essentially offers is that it allows revolving credit to masses who were hitherto unbanked, or micro-enterprises that hitherto had no access to credit because their requirements were very small. Now, this is really going to lead to democratization of credit in the true sense of the term. And when I say that, I really mean that, a lot of individuals who are looking for access to credit are unable to approach banks or NBFCs. Small enterprises, micro, mini, of that category do not have access to formal credit, and this is going to open the doors on that. With due regulation, with due involvement of regulated entities licensed by the RBI, and therefore it is a structure which is extremely unique. And the far-reaching changes that it will have, I believe, are just multiplier. What it is going to do is to allow small enterprises, which various numbers are available on various statistical databases, but somewhere I read 6 crores micro enterprises, somewhere I read 7 crores, but whatever that number is, I think it's a huge number. And then there is this whole set of population individuals who are unable to go to a bank and get an unsecured loan, or to an NBFC to get an unsecured loan. And therefore, this particular layer of the India stack is going to open the doors to this entire unbanked population of businesses and individuals. As these enterprises borrow and credit is made available to them, and this is invested into small businesses, that offers potential to grow. And obviously that is a major growth propeller. On the individuals, of course, if they borrow for consumption, which is what I see fintechs offering credit to individuals, then that will propel consumption, and consumption will lead to increased demand, and increased demand will have its own cycle. So therefore, this is something absolutely unique, and no wonder then, you know, a lot of countries around the world are wanting access to this, and India, at least on the payment side, is looking at sharing the UPI and architecture and so on with other countries around the globe. So therefore, you know, Revti, to my view, this layer of digital stack and the other layers that it stands on, which form as the edifice to this, allow for robust operation of this and the payment layer, are, I think, one of the stupendous accomplishments that India has had in the digital space, and over a short period of time of a decade. So I think it's absolutely far-reaching, it's absolutely unique, it's a force multiplier, and it's going to propel us to the next level of digital growth.
So you feel that, you know, we have the technology stack right to propel us to the next level of growth. You know, Mr. Rath, I would like to ask you, since you come from the largest bank in the country, you know, the largest nationalized bank in the country, I would like to understand from you, what are the changes in technology that, you know, as a bank you have adopted and you are adopting, and how do you see banking significantly change in future with the help of technology?
Thank you, ma'am. See, in India, I think India's stack, as Madam has told, so there are many layers. Actually, we have reached to this level when actually we have so many kind of other successful kind of stack already put in place. Like one of them, as all of us know and use very comfortably, is UPI, the UPI movement of India. So today in our bank, in State Bank, what we have done is we have integrated the UPI to our stack of, it's called PAPL, pre-approved personal loan, and pre-approved business loan. So this is the kind of first time what we have integrated. Suppose this YONO is, which is our kind of stack for the bank. It serves both for retail as well as MSME. So there MSME gets to do all his business, including his payment, UPI. So that means, suppose the MSME has a kind of shop, he can, with the QR, he can make the payment, which goes into the kind of a stack and be there. So the integrating the technology to a large extent, how it has done, it has two parts. One is the access part, say access to the customer and marketing to customer, and also kind of delivering to the customer. Today, with the kind of population of a country, I think without that probably we wouldn't have done so much of kind of credit so far. So second part is creating the product and doing the appraisal and sanctioning the product. Everything from access to the back end, everything happens online without any intervention of the branch or any person physically in the kind of whole chain. So when let's say we call it access, as all of us know, like say whether it's a YONO, every bank has their layer of kind of personal banking. So now accessing all the product whatever he likes. Secondly, doing a kind of digital marketing, which is actually big game today. Unless we with a hyper personalization reach out to the customer, know his needs, it is very difficult to kind of cut the kind of physical layer. So a hyper personalization is very much required, which is also achieved through this front-end application of YONO or any such stack. Secondly, last couple of years, the tremendous growth, almost 30 to 40% growth, what we are finding on the PAPL and PABL. That is where there is no kind of human interference involved. Starting from the kind of documentation to appraisal, everything happens online. So that is the kind of, this is achieved not because of a bank alone. We have the whole stack, we depend on so many stack. We depend on, let's say, Aadhaar. We depend on UPI. We depend on basically, account aggregator, database. So all the stacks are already put in place. So we need to leverage the India stacks, technology stack to kind of, grow the credit. Thank you.
Great, thank you so much for that perspective. We spoke about technology, but Rajani, apart from technology, which is definitely going to be an enabler, what are the other enablers that you are seeing, for the India growth story?
So I would say apart from technology, one big enabler for Indian economy is its big consumption market. So India's disposable income is growing, so is the aspirations of middle class, and we are seeing a consumption boom happening. If we look at our middle class in the income category of say annual income of 5 lakhs to 30 lakhs, the size of this population is around 430 million. And as per a recent study, this class is going to grow to around 1 billion by 2047. And this class is spending, and it's visible in the form of spending on holidays that we are seeing all around us. You see the healthy sales of QSR, we have Domino's, all these food chains penetrating all across metros, smaller cities. So this consumption boom that we are seeing all around us, and not just Indian companies, all global companies are looking at tapping into this consumption market. So that's one big enabler. I would say the other big enabler is India's niche skilled workforce. Here I'm talking about the STEM workforce, which is the reason why India's ITS sector is doing so well, which is the reason why most global IT companies are looking at setting up shops here because of the availability of this skilled workforce. And in fact, it's not just ITS, what we are also seeing is that other consultancy services, the GCC, be it in the field of legal or finance, other consultancy services are also growing. So in fact, in our total service exports, the share of other consultancy services have grown tremendously in the last 3 years. From around 18% or so that we had pre-COVID, it's around 25-26%. So this category is also growing. So I would say that's the second. Another enabler I would highlight is infrastructure. So interestingly, infrastructure was a weak point of India till a decade ago. But now in the last few years, there's so much that has happened on infrastructure front, be it, especially transport infrastructure, be it roads, railways, port, airport, last mile connectivity, warehousing. So all this is going to change the face of India. Hopefully this will improve our competitiveness, it will improve our productivity, which is much required at this point in time. Because the global economy is right now looking up to India. The global economies wants to tie up with India, be it in the form of trade or be it in the form of investment. So it's very important that at this point, we grab this opportunity and do what is really required to be up there. So I think these are some of the big other enablers that's there.
Okay, so Rajani here is talking about the services segment and the infrastructure segment are the other two enablers, But there's a whole big manufacturing segment, the Make in India initiative, which is also going to be a huge differentiator or enabler as far as the growth of India is concerned. And here, I would like to ask Mr. Dutt that, with your vantage point, what do you see as the new sectors, which are going to be the emerging new sectors of growth for the India's, manufacturing services or infra segments? And do you see that the India capex cycle is now going to begin? Because we've been hearing and we've been waiting for the capex cycle to really begin for a long time now, and every time it gets pushed by another 6 months. While there are companies, the larger companies are investing, but we're not seeing broad basing. At least from a rating agency perspective, we're not seeing broad basing of that capex cycle still happening. So when do you think that the next capex cycle will begin?
I think when you look at kind of all the sectors and the growth there's substantial kind of growth last couple of years, mainly after COVID. So overall in the kind of, when you see the whole sector, every sector is almost, utilize around 80 to 85%. So the capex cycle definitely, I think the time it has come, it is going to start. But let me also tell that I think the government push on certain kind of sectors, specifically in PLI, it has really picked up. See, let's say electronics is to start with, even Honorable Minister also is talking. So the PLI specifically in kind of electronics has really picked up. And some of the kind of defense sector has also kind of picked up, specifically kind of government defense sectors. So social infrastructure, what actually, one actually see the last year, our credit growth in SBI, in specifically in domestic corporate, it was almost 13%. So 30% growth on a kind of large base is quite substantial amount. And therein what we have seen is the growth is happening mostly in kind of in the area of social infrastructure, in ESG, in the area of ESG such as electronic vehicle, battery, and also in the area of kind of biofuel or kind of liquid oxygen for the healthcare. So these are the certain sector which has really kind of picked up, and the credit has started to come. So 13% is good. I think I'm sure like this year also up to similar growth we are expecting, and I think with the kind of certain sectors, sunrise sectors such as electronic vehicle is one area I think is just taking the everyone of us to surprise. And everyone, I think today in our country is committed to kind of, just dropping the ICE and going the kind of electric vehicle. So that is, I think, the more participation of the whole country, and I'm saying the electric vehicle manufacturing will be the next big game apart from defense.
Great. Thank you so much, sir. So, sir is talking about ESG as being a differentiator, is driving kind of credit also. In fact, in the earlier session, we had heard Mr. Ashish Pandey of Bank of Maharashtra saying that the bank is actually willing to give a differentiated rate of financing for compliant or environmental, social governance compliant companies, and that's a big kind of change which has happened. So I'd like to ask Meena, how do you see this entire climate financing market evolving, especially in India?
So it's obviously a very interesting discussion. So look, I think the fundamental fact is that climate is a big source of concern in every which way across the world. And what the world and India are trying to do is to move towards a carbon-free path and decarbonize. That is the goal. If the climate deteriorates, it has impact on agriculture. If it has impact on agriculture, it has impact on population, food supply. Fundamentals are impacted because of a bad climate, deteriorating climate situation. So I think it touches to the core of our existence, food supply, all of that will be impacted as climate deteriorates. So globally there are big budgets and so on and so forth. Now why do we talk about ESG bonds, climate bonds, green financing, blue financing? All of these are fancy terms in a way. But really what I'm trying to say is that it actually touches to the core of our existence. Without food supply, I don't think we have any existence. And therefore, ESG bonds or climate bonds are essentially a means to this end. They are the path to decarbonization. They are a path to, low carbon imprint. That is what it is. What this essentially means is there is a lot of encouragement from the governments to the corporates and the government itself to say that, you must issue green bonds so that the money is utilized into green initiatives. That is the idea. Now, then it has to be incentivized. People have to be incentivized to be issuing green bonds, and so that then, they can lend for the correct purpose, which is, waste management and, kind of non-conventional, non-fossil fuel using energy, clean vehicles, all of that. So that is the encouragement. Now, so the budgets are huge globally. Actually, the demand for the requirement is very huge. The budgets are not available. And all of you and I read about COP26 and so on. But it's a complex situation. So for a developing country, you need to urbanize. You need to industrialize. You need to build infrastructure. Now, all of this cannot happen in a very clean way. So the dilemma is, how do you industrialize, how do you urbanize, how do you build infrastructure, and yet go on the path of 2040 target of no carbon. So that is a very, very big dilemma, and I don't think anybody has answers to that. Now I'm digressing a bit, but it is a complex issue. So bond issuance is a means to an end. Green bonds are the means to this end. The idea that the government is doing, and I think it was announced in one of the earlier budgets also, the government of India, the finance minister has announced sovereign green bonds. Now, the amount may not be humongous, but I think it speaks a story. I think it sets the pace. Now, RBI also, for instance, has taken initiatives to this end to say that, lending to non-conventional sources of energy, projects which are in this domain, clean energy, will qualify for priority sector lending, which all banks have to work towards. SEBI on its part, has a broad set of guidelines for green bond issuances, and it does expect top listed companies in India, in addition to financial reporting to stock exchanges, do also a business responsibility reporting. Where it has to say what its ESG agenda is, so which is environment, social and governance agenda is. So I think from all quarters, the regulators are trying to incentivize companies and corporations in that direction. Now, to say have we achieved what we had to, I don't think so. I think it's a very complex path. And why I say so is because a lot of projects that do qualify for green financing may be greenfield projects. And you don't know the potential investors. Large investors do not know the potential or the risk with that greenfield project. So to say I will put in 100 crores in green bonds becomes difficult. Now also because these are green bonds and we have to raise money for the right purpose and deploy it for the right purpose, it requires certifications, it requires verifications. So there are requirements of compliances which add to the cost of these issuances. So net-net, I think we're on the right track, but I think it's very preliminary. The total issuances, I think, are still small. And most of the issuances that Indian corporations have done, public sector undertakings, private corporations of green bonds, most of them are dollar denominated. So I think it's a very complex domain because a lot of things need to fall in place in terms of guidelines, in terms of practical experience of investors who will put money where the mouth is. So I think, a lot of regulatory initiatives are in the right direction, but I think it will need a little bit of more time for the ducks to be lined up, so to say.
Yeah, I do agree, Neena, that it's a pretty complex topic. I think we're just beginning to kind of acknowledge the aspect that, green finance or green financing is something which needs to be done not only for this generation, probably for generations to come to live happily on this earth. But we've spoken about growth, we've spoken about which sectors are going to propel the growth, the enablers to the growth of India. But I'd like to ask Rajni, since we are a rating agency, we also like to look at the glass half empty. And that's where, what in your view are the near-term challenges that, the country is faced with, and how do we navigate them?
So, one big challenge for Indian economy is, are we generating enough jobs? So, I spoke about this specialized STEM workforce, which is easily getting absorbed in IT, ITS sector. But we have around, as per estimates, we have around 16 million people entering our workforce every year. Are we creating enough jobs for them? And here I'm not just talking about specialized high-end jobs, but even relatively lower skilled workforce. So that is a big challenge, and that is where we need the share of manufacturing sector to grow, because it's the manufacturing sector which will be able to absorb a large chunk of this population. So that's one challenge, increasing the share of manufacturing sector. Secondly, we need to reduce the dependence of our population on agriculture sector. So a large part of India's population, more than 60% lives in rural area. A large part of rural population is employed in agri sector, and agriculture sector has low productivity. It doesn't need so many people. So there is need to move a large part of workforce from agriculture sector to more productive sectors, manufacturing sector or services sector. So that's one thing. Second, we are talking about, our demographic dividend, but what is also important is that this huge workforce that we have, population that we have, we equip them to get productively employed in the workforce. And that is where the expenditure on, the spending on health, education and skilling becomes important. So if we look at the kind of spending that's happening on health and education, it's only around 5% of GDP. Here I'm talking about government spending. And I would say that's not enough. That is where there's need to further step up investment in social infrastructure. So these are some of the challenges in the long term. The other challenge is the ease of doing business. So if we look at India's ease of doing business, it has improved. If you look at the World Bank's latest estimate that we have for 2019, India's ranking is around 60th, something 63 or something like that. But which is an improvement. It was worse earlier, but we still have a long way to go. So unless we improve our ease of doing business, unless there is more of labor and land reforms happening, we will not be able to attract investment the way we want to. And like I said, right now other economies are looking at us favorably, but at the same time we have many smaller economies like Vietnam and Bangladesh competing with us. So it's very important that the ease of doing business is also improved so that we are able to take advantage of this opportunity. So I would say in the long term, these are some of the big challenges. If you talk about very near term, I would say near term, one big challenge, I'm just talking about if you look at this year, I think one big challenge would be what happens to, these weather related disruptions. We are worried about, though IMD has said normal monsoon, but we are worried about, what's going to be the impact of El Nino. And then, food inflation, which had just about started to, settle down, will again flare up. We are already seeing, cereal inflation being high. Now there's pressure on rice inflation, there's pressure on pulses inflation. So that's one risk which is there in the near term. And I would also say in the near term, the other risk is global slowdown. So, if global slowdown turns out worse than, what we are seeing right now, that would be a big challenge.
Great, great. So, thank you so much for that, Rajni. I would like to open the floor for any questions that you might have.
Am I audible? Yeah. I have a question for you. See, now since last few years, every day we hear that government is doing so many activities like constructing the road, airports, then huge expenditure is happening on the railways and also the ports, etc. Also, if you see the power sector, I mean to say conventional as well as non-conventional power. So, what will be the impact on the economy in terms of GDP, and when the actual benefits of fruits will come, we'll be able to realize that on those expenditures?
So, yes, that's actually a big positive for the economy. If we see in the last few years, the government has really improved its quality of expenditure. So if we look at the ratio of capital expenditure to revenue expenditure, that has tremendously improved in the last 3-4 years. And that's a big plus, and that's why we're seeing all this investment in infrastructure happening around us. The impact of that would be, manifold. In fact, this should also lead to private sector investment picking up. This should be supportive of, right now we are all talking about when is the private capex going to pick up. But I think this government push to capex will also enable private capex to pick up. And as far as seeing the impact of this is concerned, I would say to some extent we are already seeing the impact of that. And of course we'll see much more going forward. But if you look at the statistics in terms of what kind of FDI inflows we are getting, how much of interest are foreign investors showing in Indian economy, we are seeing quite a significant improvement there. Specifically, if I look at last year, it has slowed down a little bit from around more than $40 billion that we were getting earlier. But that's also because of the global slowdown that has been happening. But broadly, I would say that, like I mentioned earlier, all this investment in infrastructure should help improve our competitiveness in the global economy.
And this question is to Nagpal Madam. This is with respect to the ESG that you just spoke about. While the importance of ESG cannot be undermined, I mean, an economy like ours, which is a developing economy, and many such economies around the world which are developing, I think they'll have to kind of balance the ESG part with their growth part, right? I mean, there's a lot of population which is underserved, which is really below the poverty line, and to have growth, certain ESG goals probably need to be sacrificed. I mean, how do you balance the ESG part as well as the growth part for the economies to come out of the mess that they are in?
So I think you're absolutely spot on. It's a complex situation. But here's the point. So the idea, and you cannot do everything at one go. So you see this incentivization and shift towards, for instance, in the automobile sector towards either, electric vehicles or hybrid vehicles, right? There is a shift, and that is resulting from certain degree of incentivization that is coming in. So that's one. The other is, I think at the top, the governments do set the agenda. And in this case, for instance, this government of ours has set the agenda that by 2040, a better part of it, I don't recall if it's 100% or 80%, our energy production should be from non-fossil based sources. Now, which means non-conventional sources of energy. Now that requires investment, and you have seen the shift that has happened over the course of 2 decades in this direction. So also, for instance, clean vehicles. Now the governments did bring about this Bharat 2, guideline, which said that vehicles after a certain age need to be discarded, and they are impounded by the local authorities. There's a Supreme Court order. So in Delhi, for instance, 15 years of vehicle, and they take it off, they lift it off your premises. Now, these look like small initiatives, but they're coming from a direction from the top. But, you're absolutely right that, there is no clear answer to this. So I think a recent not a newspaper, but a magazine reporting that I saw, which said that at this, a conference of parties, which is called the COP26, held in Ireland, they said that the agenda, that the budget required to move all developing countries, see, developed countries have done their piece to a great degree. So this article said that the developing countries need a budget of $2.8 trillion to move to the path of, green economies in the next 20 years or some such time frame. Now, $2.8 trillion is something that nobody is able to, in a position to commit. The amount I read there that has been committed by developed countries is $100 billion. So you can see the gap between 2.8 trillion and 100 billion. Rest of the budget cannot necessarily only come from the developing countries, because they will either invest in their infrastructure or urbanization or industry, or they will put money on this greening of the economy. So it is a dilemma. It is not a solved problem. The question is that, pollution moves all over the place, and only developing countries haven't created the pollution. So everybody needs to pay, because we are all privy to the same earth and the same air. So, there are certain trends which I am holding on to, which are very positive. And that is why I feel that the direction, the trajectory seems to be right. But really that budgetary limitation is there between how you develop versus how you green. And that is not just India dilemma, that's really all developing country dilemma as well. So I may not have answered your question absolutely entirely, because there's no real answer as far as I see to my ability. Thank you.
Yeah, any more questions before we wrap up this session?
Hi, good evening to all of you. Just wanted to check on what is happening in the financial domain. See, altogether in India there are 34 nationalized banks, 21 private sector banks, more than 31 cooperative banks. Now 8 lakhs cooperative societies are there. More than 10,000 NBFCs, which is contributing more than 42 lakhs crores of asset business. After it, there is no financial sector's disruption is going on in India vis-a-vis 5 years back or 7 years back. After HDFC Group, do you think more consolidation expects near future? As our financial sectors are not as competitive in the world, we are always talking about artificial intelligence, we are talking about the productivity index, we are talking about everything. But we are not as competitive as the world's financial sector. This is point number one. And is it because the fintech companies are now taking over banking business? So what is your take on this?
I think consolidation, as you said very correctly, this is very, I just started in SDFC, but SDFC, as all of us know, bank, it is not like first time. So many banks, and almost I think 5 banks, got amalgamated to SDFC over time. So, say today, like the first, what we discussed about the India, stack, I would say that everything is actually, happening together. So the fintechs are there because the India stack is there today. The fintechs are there because banks are utilizing them. We have a very strong governance. As you know, how sometime back we have seen how disruption has happened in fintech in terms of giving loans to customers. So in a very regulated kind of environment in banking. So now it is very clear that ultimately the ownership or the kind of risk mitigation has to be taken care of by the banks. So direct lending by fintech, it has to be kind of through the kind of RBI new circular what has come in. So without that it cannot happen. So balance sheet will be lent by the banks, maybe the kind of front end access has to be kind of given by the fintech. Now India is not competitive. I would say I think India is quite competitive, say in terms of raising ECB. I think today if you see, because today in India, our NIM is one of the best in the kind of whole world. Okay, and here also we debate why the NIM is so high, why Indian banks are so profitable, while other banks, NIM is very low. So NIM is good, and so we have a very strong regulated system of kind of taking, like giving credit, and but taking the deposit franchise is very strong. And so therefore, specifically to your, you said many questions, See, the NBFCs are there. NBFCs, if you see the local bank, today actually in the afternoon we are discussing, NBFC, they have a very kind of, different target segment. One is, to the sector who do not have a proper KYC, or they want, very faster kind of, credit, dispensation. So everybody has a kind of, specific subject matter expert. So I think if I got anything specific, we can discuss.
My question is basically why the consolidation piece is not happening the way it should happen. This is point number one. What our balance sheet we are leveraging and what we are getting on return on equities and return on capital employed and all that. I'm okay with that. What I'm trying to tell you is we are not leveraging our balance sheets overseas. We are not funding to the overseas companies. Then my question is like the Bank of China, the way they have consolidated themselves. Are we expecting in near future? Because we are not talking about the financials which we are lending to the overseas. So my limited question is,
Yeah, I think Nina would like to take that.
So thanks. 2 points here. You're right, if you take the top 5-7 banks in the world, the balance sheet size, the only now HDFC bank has figured in there with 170 billion or whatever the number is. And the largest bank would have 500 billion or close to $500 billion or more. So that is, you're absolutely right factually. Now, consolidation is a function of two things. One is either organic or inorganic. Inorganic is when the public sector banks, the governments decide whether to consolidate banks, and 5, as Mr. Rath mentioned, have just recently been merged. Before that, 3 other banks were merged into other banks. So 5 merged into 4 banks. So that is inorganic. Organically, also this merger has been happening. Weaker ones will be picked up, and it's a normal course of business, I would think. But I think the important thing for a country like India is to see whether we have banked our entire 1.4 billion people if they require banking needs. And so last night, actually you and I were talking, and one of the points we talked about was co-lending, and she did mention that. And it's interesting, so in about 3-4 years ago, Reserve Bank said that now NBFCs and banks can co-lend. And this was a marriage that was made because the cost of funds for banks, basis the CASA, is very low. The cost of funds for NBFC is high, but they have reach and nimbleness and some connects with customers that banks may not have. And therefore, this is an area that has really taken off. So I was talking to somebody the other day who keeps tabs on the markets, and I said, co-lending, how is it going? And they said it's now routine business, there is no need to look at the limitations or hiccups and so on and so forth. So in this year alone, 25,000 crore worth of deals co-lending deals have happened, So that's another area to reach the last mile. And then of course, to Mr. Rath's point, the fintechs have sort of brought banking to 5,000 crore, 5,000 rupee loan, 7,000 rupee loan to a lot of people. So I will take a second and maybe a minute to tell you that there is a fintech whose CEO told me that his borrowers are essentially a lot of young employees in cities like Pune, Bangalore, etc., junior employees who stay away from home in rented areas, in rented facilities, and they run out of their salaries by 25th because they are consumerists, they spend money. And I don't think I ever ran out of my salary when I started working because, we lived a bit cheaply. So now because this generation spends money, they run out of money, and so they need a cover for 5 days. So they borrow a few thousand rupees and then return it once the salary comes. And so there's this cycle that goes on. There is another gentleman who has a startup who told me that he provides financing for automobiles, which means that if I have a two-wheeler and I have a better job or a salary now, I want to switch to a better two-wheeler, a motorcycle. And if I'm graduating in my salary, then I want to move to a small car because I have a small family. And he said what they're doing is they're using artificial intelligence, and they are attaching sensors to these second-hand vehicles which they actually offer a platform, and they're able to, you know, frankly, the vehicles they sell or finance, they're able to keep track of what the driving is, quality of driving, quantum of driving, accidents, etc. And so then they price it accordingly. And that apparently fintech platform is doing very well. So, a long story short, my submission that I wanted to make to you, that you're absolutely right factually. The Indian banks don't have that kind of balance sheet. But I think a lot is happening in India which is the felt need at this point in time. And that is, I think, extremely crucial.
Yeah, so I think that was the last question. Thank you so much. And thank you for being such a patient audience. Thank you all the panelists for sharing your insights, spending time and coming for this event today. Really appreciate. Thank you, Neena ji. Thank you, Mr. Rath. Thank you, Rajni.